Maybe you need a chart.
So don't worry, you can hear us before the start of the webinar. So welcome. It's just we just set up everything so to be ready to start at 3 o'clock. Buddy, this is another WH Self-Invest webinar. My name is Stefan Fröhlich, and I'm very proud that so many people are here for our English-speaking webinar today. And we have two top traders from Krechendo, which will show you the scalping from the order book. So that will be a very nice thing, and we can look to them to do that live just in front of us, so we can see everything. We can take a look to their domes, to their charts, and to the markets that they are trading. So I think it will be very, very helpful for you to look how those pros are trading. Just before we start, we need to do the little risk disclaimer. So in this case, we are just using futures today. So futures are complex instruments subject to unpredictable changes in price. They are financial instruments which offer the investor the possibility to use leverage. The use of leverage implies the risk of losing more than the total value of the account. Each investor should verify, if possible, if the help of an external advisor, if these financial instruments are suitable for his personal situation. Before investing, it is recommended you familiarize yourself with the contract parameters and risks of the instruments you wish to invest in. Profits realized in a demo account are no guarantee for future profits. You are not obliged to use leverage, and everything we show here, just in terms of the trades, of the signals, are not the advice from us to trade those instruments. If you do it on your own. Okay, thank you. So I would like to introduce our professional traders from Krechendo Trading. They are located in Paris, and it is these are two pros which we are working together. We are partnering with them since a long time, and they were also our special guests on the World of Trading last year, showing this what we see right now on the webinar live on stage. So I'm just looking forward to see what they are doing today. It is Nabil Berouag and Tarek El-Mari. So a warm welcome from me to you. How are you guys?
Yeah, hello Stefan, hello everybody. Thank you very much for welcoming us.
Hi everybody, it's Tarek. I will trade live during this hour, and welcome to this webinar.
Okay. Very, very good. So I give you the screens so that you can show us what you have today.
Okay, so we will explain you and present you a bit what we do and how we work, and we will make some live trade in front of you, so you will understand how we work. It's very easy, simple. It's scalping. We don't have a lot of indicators or whatever. We just focus on the prices.
Just before you start, I have something to do, because I would like to find out when all the guys that are in here have started trading. So I have a little poll here for us.
Okay.
So I will show it. Yeah. So when have you started with trading in a live account? Please click on these three options. More than 4 years ago, in the last 3 years, or there's a typo I see. I'm not trading right now. So then we have an idea what kind of
the audience, yes, great
audience we have. Yeah. Okay, very good. So we have 63% have voted right now. Okay, so we are at 70. I think that's fine. And now we can take a look. More than 4 years ago, 38%. In the last 3 years, 33%. And I'm not trading right now, 29%. So it's almost near to a third of everything. Okay, thank you.
Yeah, thank you. So you have futures traders on it on the screen.
I think we have both. We have CFD and futures traders.
Okay. So anyway, we will work on the indices, so it will speak to everybody.
Yeah, that's good. That's good.
Whatever they
So
trade.
I hope everybody is hearing us because I don't see any questions in the chat. Are you hearing us? Is everything fine? Do you see our pictures? And just take.
Yeah. So
Can you
maybe
type
we
in?
can.
Ah, okay. Thank you. Thank you. Okay, it's fine. Now you can go.
Okay, wonderful. So to start, to explain you what you can see on your screen. On the left side, you have the ES, which is here. If you can see the mouse, it's the S&P 500. You will see on the blue lines on the left all the buyers that are presented as we are working on the futures. It's a market where all the buyers and sellers must show themselves, which gives us some transparency. It's very easy on this platform to trade, so you can make an order with just one click. On the left, so you have in blue the buyers, and on the right in red the sellers. Okay.
Okay.
You have on the two white columns are the real executed orders or the market executed orders. This will help us to understand and see where are the buyers and where are the sellers and what the market is really doing at this moment. In the middle, you have the Nasdaq indices, so we'll follow. As you can see, it's very volatile compared to the S&P. And on the right side, you have the crude oil. So we'll see also this underlying, which is very interesting for us, as you will see on our trades. And on the really right-hand side of the screen, you can see what we have done this morning. In trading, it was quite volatile, so very interesting and easy to take. We got a good market this morning.
Oh, by the way, this is ATAS what you're using, huh? That's the ATAS software.
Yes, it's a task platform that people can find in WH.
It's possible to trade with it at WH Self Invest as well.
Exactly.
Yeah, that's fine. Yeah, okay.
So our way of working is scalping. Scalping means we take some orders in a very small time. So we enter in the market very fast, take a few points, and then we exit. The main part of our work is money management. We always enter with protection, with stop. We always follow our position. We never leave when we are in position. We look at our screen. We don't do any overnight trading, so we don't put us on risks, because in the night, markets are closed and you cannot exit the market if there's any problem. Or for instance, like this morning, they have found a good medicine against the coronavirus virus. So it means that all the markets went very bullish. So to avoid all this risky parts, we are not in the market in the night. We trade, we enter in the market, we take a few points, we exit the market. This is how we work. This is how we used to work also for banks and hedge funds, as we had more than 15 years of experience in different banks like Société Générale, Bank of New York, Dexia, Millennium Funds for the one who maybe know some big hedge funds. And this is how everybody's working. So you have on the screen all the order book. Order book is a very simple way of working. Of course, we have a look on the graphs. Maybe we're going to show you a graph we have. You will see one element very impressive is that it's very simple. We don't have any indicator. We just work with support and resistance. We just determine the price on which the buyers and the sellers will fight. Starting from this point, we go back to the order book and we have a close look at how the market will move if there's buyer or if there's sellers. When we see a seller or a buyer that is stopping the market and bringing the market in the other way, then we enter the market. This helps us to have the very good entry points. This is the main idea of our technique is to have a very good entry point. When you have a very precise entry point, then you can put a stop very close, and you never put yourself at risk. So we'll have in 20 minutes US Open, which is a very good part for us. The advantage of our method and technique is that we don't have to guess if the market will go up or down in the day. We just need some volatility. As long as the market is moving, it's perfect for us. So we enter on the market in 2 or 3 times, and with a stop loss, and then we let the market. Yes, we are searching for an area. It's not always the same point. So as you can see on the right, with the mouse, you have a red line. It's where Tarek just entered in the market, and he's searching for an area. So he will try to enter the market once, maybe twice. If it's working, then we'll take our benefits. And as you can see, the first blue line is a second enter, and the first red line at 50.76, sorry, 50.76 is a stop loss. So as you can see, stop are very close to our entry points. Voilà. He just okay. He just exit the market with a 1 tick win, with loss. Okay, 1 tick loss. 1 tick is 10 euro. Okay, so he had two contracts, which mean 20 euros. He wants to enter the market on 50.80. He entered in 50.84, exit in 50.83, because he wants to be executed in 50.80. So he's searching for a better entry point. If this entry point succeed, then he will be in his position quite safe. So as the area seems to be a good area, he will try to pay again 84. En fait, j'ai acheté 84. Après, j'ai voulu acheter 80, il m'a pas exécuté et j'ai coupé 83 parce que je pensais qu'il allait m'exécuter 80. Donc ça, c'était une zone d'achat, la zone 80. Il y a un acheteur. There's a buyer on the 80 on the zone, on the 50.80 area. There's a buyer. So he tried to enter 84 and he exit 83, and he's trying to enter again in 84 with a possible 80 entry. For the moment on the crude oil, as you can see, as you can imagine, we are in the range. I'm going to show you on the graph. Crude oil, yes. So we will see on the crude oil graph here. He just bought here, and he cut just 1 tick down. He wanted to buy at this point because he wanted to get a better price, a better entry price. And as you can see, we have a range from 50.70 until 51.15. Ça fait partie du trading. Yes, it's a part of the trading. You enter, you make some you try, and make some small loss. And if the market, I was buying when I was buying 84, then I scratched 83, and I tried to buy back 80. But if the market, if I was buying 84 and the market is moving up, I will enter a new position 86, 88, and I try to increase my size
when the market is moving up. So it's not a problem for me to scratch or to close my position with one tick, with minus one tick, because I'm sure that when the market I will have a good position, I will make more than one tick or two ticks or four ticks. So the crude oil is very volatile. So you cannot expect to put a stop loss at one tick, two tick, because the market, for example, yesterday the market dropped 250 points. So when you trade a market with a large range of 200 or 300 points, your stop loss is 5 ticks, 10 ticks. But when you decide that your position is not good, you can close very fast. But losing 5 ticks or 10 ticks in a market who made 100, 200, 300 points is not a problem. So on each product, your stop loss is not the same. So now all the market is quiet because all the participants are waiting the US opening, but we will monitor closely the three market. Like this, we will enter a new position. So this is in and out trading. So we are not watching indicator or a lot of things, just the tape, and we are in and out trading. So on the Nasdaq this morning was very easy, because when we heard the rumor of medicine from the coronavirus, we just buy every time the market make a small the pullback. We buy all the pullback on the Nasdaq. That's why we make a good money this morning. So we come back on the area 80. So you see the 80, they are 100 here. They are big size at 80. So at this moment they are a buyer at 80. So I will try to buy this area.
When you have some time, could you explain, please, how you found the battle zones for this market?
Okay. The battle zones, we try to observe the sellers and the buyers. So on the charts, we can we're going to show you one chart. 1 second. Like, can you see the chart?
Yeah.
So basically, we have a support down there at 70, and we have a resistance at 51.15. Okay.
Okay.
In those zones, we will observe the order book to see if the buyers are still there for the support and if the sellers are still there for the resistance. If we don't observe any buyer, we're not going to buy. Basically, we are following the market. We are not trying to. Yeah, you see the 80 it did work again. The 80 did work again. Now we'll see. Yeah, it just did few lots at the 81, but it didn't go at 80. I guess Tarek was ready to buy 80. Unfortunately, it's only stopped at 81. Now we'll see if it breaks 85. There's huge chance that it's gonna go through 51.00 and go maybe to 51.15. So that's the area we're gonna look. In between those area, it became too dangerous, too risky to set a position. Yeah, we don't want to be in the middle, in position in the middle of the range, because it can go to the resistance or it can go back to the support. And we try to assess the risk, and we have not that much to win, and a lot of risk for this tricky position. So now we're only going to observe. There's a lot of time where we don't trade, we observe. And when it gets to our levels, then we're going to observe the order book and see if the battle is going to be at the level we determined before. If it does, we're going to see if the sellers are still there If they're still there, we're going to enter the market with them. So we will be always waiting for confirmation from the order book. Does it make sense?
Absolutely. And what I understood is that you have a higher likelihood when you are not in the middle of the range. Huh?
What? Sorry?
You have a higher likelihood that you will have a better trade when you're not in the middle of the range.
Exactly. Yeah. That's why we are looking at several markets at the same time. That's why if you go on internet, you will see like a trading desk with a lot of different order book. Because to maximize our winnings, we're going to look for particular setups, but in many markets. So here, for example, is the Nasdaq. It came back at the pullback at 55. Now it's ranging, so there's nothing we can do obviously right here because it can go down at 45 or go up at 62, and it's actually at 20 past 3. So we'll be waiting. We'll be waiting for the US opening in 10 minutes. You can't get into the market before the US opening. It's way too risky. So now there's nothing to do. We'll observe and we'll see how the US market open.
That makes sense. Yeah.
So yeah, the crude's still in the middle of the range, right in the middle. Yeah, it went up a lot, and now it's just raging at the highest. And Tarek did observe one big buyer at 80. Whenever the market goes to 80, someone is buying. Like for a few hours now, he's buying. It doesn't let the market go down. So now he's a bit upset because he wanted to buy 80. That's why he said during the live. And unfortunately, the market stopped at 81 and went up straight away. That's the move he was willing he wanted to take. If you see this point here, if you see here, he tried to buy, but then he gave up his position because he saw some sellers. He wanted to, so he put an order at 80, but unfortunately the market went up without him. So now it went back to the higher part of the range, but we can't do anything because of the time. It's 20 past 3. We can't.
En fait, le range il a fonctionné la matinée. Et là maintenant, on va voir si on va jouer le breakout.
So he might try he might try the breakout because now the range did work out quite well during the whole day. From as I told you, 21.15, and the down range is 50.70. And for him, he said he doesn't want to get into a short position because of the news with the vaccine of the coronavirus vaccines. So it's too dangerous to short this kind of market because the uptrend is obviously thanks to this particular news. This news did make the markets go down a lot. So now they supposedly find the vaccines. So everyone is buying. Is buying the good news. So yeah, if you want to short, you better get to pinpoint the perfect point to short the market. Yeah, look at 15. There's a seller. Whenever the market goes to 15, is the resistance. Today's resistance. Whenever it goes to 15, is buying a lot. You see this blue line.
This one. Yeah. So at 15, 100 contract. This is this seller always sell at this time. So for the moment, it's still there, but I think that with the US opening, this seller will disappear because the US trader will have the news coming from China that they found something from the coronavirus. So at this moment, they are a big seller, and this seller at 51 spot 15 blocks the market in a range. So the market come at 51 spot 414, and you see that the seller is at this levels. So if this level break, maybe we will try to buy the breakout at this area. But I think that the Nasdaq and the crude oil at the opening we'll have a lot of opportunity. Après 9h, 10h30, normalement c'est 16h, 17h30.
So normally we mostly trade the European opening from 9 to 10 or half 10. That's where you have most of the liquidity during the morning. After that, it became quite a bit. And from 12 to 2 o'clock, we don't trade that much. It's too risky. There's not that much volatility, not that much liquidity. And we start again normally. We tend to look at the US opening, but straight at the US opening, it's a bit too risky because all the investors are going to put their order in and the market become a bit crazy. So we tend to get away from the US opening and wait a few minutes until it become more tradable. And the real time where we trade is like 4 o'clock, a bit before 4 o'clock to 5 o'clock, something like that. That's where the market is more easily reading. You know, it's a bit better for us to read the market, and the liquidity is there. The first step for us to trade is the liquidity. Where there's no liquidity, we don't trade. It's too risky. One big buyer can set the market wherever he wants. So we want the liquidity and the volume and a volatility that we can trade, not some crazy volatility like 10% or something like that. That's why we don't trade stocks alone. It's too risky. So now the thing is, we're going to watch the US opening in 4 minutes. There's not that much you will see in the next 4 minutes. Yeah, we can look at the order book. We won't take any position, but we can check the order book and see what is happening at 51.15. You know, 109 lots on the crude oil. If it's going to break, the market might go a little bit more higher. If not, it might go down to the beginning of the range at 50.70. So now we can see that the seller is selling at 12, at 11. There's like one big seller. It doesn't let the market go up, which is what we expected, basically. Yeah, straight at the resistance. Yeah, exactly. So let's see if the sellers will be stronger. Yeah, so you can see on the order book this seller. You can see it better than on the chart. On the chart, you can see that it just blocked a bit at 10, 11. But you can see exactly on the order book, there's still 100 lots at 15, 113 lots. So it doesn't let go his position. It's what we call an iceberg. That means that whenever the lot he put, for example, the 100 lots he puts at the selling side at 51.15 are bought by someone, he will recharge and put more lots. So he won't let the market. So that means he got a huge position, but he's only showing little by little. Because if he shows all his positions straight, people will panic and will sell. And if people sell, then he will have to sell at a worse price. That's the thing. So what he's going to do is not going to show that much, and he's going to sell little by little. We can see the volatility is increasing because it's nearing the US opening. You can see on the Nasdaq there's some big order passing. We're back at 12 on the crude. You see, whenever the market is bought, you see 100. Like we see 12, 15, 20 lots at 51.12. But whenever someone buying, someone you see is selling again, 13. He's selling again. Now it's testing. Ooh. So normally it might have been like a breakout to trade here. But the thing is, right in the middle of the opening session in the US, it's too risky to trade there. If it was like 20 minutes ago or in 10 minutes, it would have been different. Yeah, we can't enter the market 2 minutes before the US opening, unfortunately.
Parce que là, le breakout, il était pas mal.
He's still selling, but the breakout was once the buyer broke. Now it went from 15 to 22, still buying. but in less than a minute as the US opening, so the market might reverse quite aggressively. That's why we won't take this opportunity. So now the next level is quite far. C'est où le prochain niveau? 40, 45. The next level is around 50. So let's see if the buyer will still be there. So now the market session in the US open. You can see the Nasdaq is moving a lot. You can see all these sellers. So the volatility is increasing drastically. So it's too risky for us to take a position. Let's see what's happening when things will calm down a bit. So here on the S&P, let's see what's happening on the S&P. You can see like big volumes there. We saw like a big buyer. Ah, tu enlèves ton stop. Appuie là. À côté la flèche. Non, voilà, on fait ça comme ça. Appuie là. Voilà, tu fais none. Super. So now we sold 28.75 because there was a big seller, but unfortunately we saw a big buyer as well. So that's why we took off the position. And just when we took off the position, they sold. So you can see the crude oil, it went to 30 as we expected, unfortunately. This was the last big volume on the S&P. That's why we tried to sold this one, and we saw a seller. Unfortunately, straight after we sold, we saw a huge buyer. So the probability that this big volume go down is quite high. It might go down to what we call the POC, is the highest volume of the day at 27.50. As you see, the crude oil is still going up. The breakout was quite a good trade, but you have to respect your strategy to say we don't enter during before the US opening, so we didn't enter, even though we are quite confident with this trade. That's why it's very important to always respect. And as we said, the next level might be around 50 on the crude. So when the resistance at 51.15 broke, we saw only buyers, straight away buyers. So let's see if this movement will carry on until 51.50, which is the next level, the highest of what yesterday. And let's see if it will work. So basically now you'll try to sell just before the resistance, and because it's a quite good level, and you can see whenever it goes at this level, the seller are recharging. So they stopped 1 point before. They stopped at 48, and the target was short at 49. So we haven't been executed. And if this 49 break, we might put another lot at 50, around 60. So the market is going up. The indices are going up as well. So now our stop was hit. So now I did put a stop just after the highest of the day, because if the highest of the day break, the market will go up. Okay. So that's the crude oil. You see the level at 51.15. So he bought.
J'ai vendu 64 et j'ai racheté 48. Et j'ai rentré 2 fois en fait.
So he did 2 positions. So the first one was the losing one. Then he entered 2 positions at the highest of the day, and he did some money straight at the highest.
On ne voulait pas mettre de short comme on avait dit, mais le problème c'est que là maintenant c'est compliqué de mettre un achat.
Yeah, the thing is, it's tough to short the market, but it's even tougher now to buy the market because it's so high. Donc, so we'll try to trade corrections.
On va travailler avec des stops. On va essayer de, à part si un retour.
T'as vu le short? now we'll only look for corrections, and whenever we put some trade on the crude oil, because it's very volatile and the trade is obviously up, we will work with a stop order, because we can't take the risk to let another pass away. The S&P is a bit, the order book on the left is a bit sad, because we sold at 28.75, then we bought back and we tried to sell just 1 point above, but unfortunately we haven't been executed, and now the market is just going down. Now the Nasdaq and the S&P are down in one particular good support. So let's see what's happening there. We'll watch as well carefully the crude oil to see if it will do a new high. If the new high is done, maybe we'll try to set up a short position. At the same time, the
winning
Nasdaq
trade was too short, huh?
Sorry?
The winning position
Yeah.
was too short. Huh? You bought it before and then you sold it, huh?
Yeah, basically we did short one. We've been stopped, and
Okay.
then at the highest of the day we short two
Okay.
lots.
Okay.
I mean, two positions. So we try to buy the Nasdaq, but obviously it's just selling straight away. So
Yeah, I see.
very near stop order, and we try to pinpoint the perfect reversal position. But because it's very volatile, it's a bit tough. So now we did Tarek did a buying position at 18.50. You see, whenever he lose very small amount, and when he wins, he's trying to get the full movement. So now we can see there's a huge seller. Whenever the market is moving up, someone is selling quite high. The S&P is back at his level.
J'ai pas pris mon login parce que je voulais.
He didn't take his profits because he wanted to get like a proper uptrend. But now the market is very volatile. You see, it's just
it's moving quickly.
It's moving quite a lot, yeah. And the S&P is less bearish than the Nasdaq, because the S&P is back to a POC, and the Nasdaq is still doing like a new low. So let's see if the seller is still. You see, whenever it goes up, one big seller is selling like in 5, 6, 7, maybe 8 prices. So you see, he's selling a lot, big positions, and he's making the market plunge. So now he bought at 18.25, and he has a stop order, flat stop order. That means he can't lose money. That's it. So by doing that, you want to take a full swing, maybe like a correction until the next big support or a big resistance. But unfortunately, we can see that there's a huge seller that doesn't let the market go up. At the same time, the crude oil did quite a big correction as well. So it went down more than 30 points.
Je mets avec un et après je vais. Dès que ça passe, je mettrai plus.
So we try now to determine the most accurate reversal position with the reversal price to be more accurate. If we get to find this particular point, we'll make some money on one big move. So we lose a bit, we lose small amounts. That's very important to set up very near stop orders, because we don't want to lose too much. Otherwise, the strategy will be completely losing. So now we can see the market is hesitating at 0.9. So it's the same as before. And let's see if the market will correct there. So it might go up to 22, a full pullback. But for the moment, you see, whenever the market is going up, someone is selling. You can see the red position on the right. Like you have like full swing of selling positions. So now the buyer is getting stronger, and will follow the position. He will try to buy more lots at 10.25 to get to reinforce his position and to get more lots into the market if the market is clearly doing his pullback. And he has a stop order at 8.50 and 8. Oof, this is a very, very huge seller. So he stopped selling for a moment, and we clearly think that, oh, there might be a buyer, but whenever we think that, he's just selling more and more. Figure.
Okay. Lots of movement.
Yeah, it's very the US opening is very volatile, and particularly today because of the big news we had this morning. So people are selling and buying
That's
and
tricky, yeah.
their position. Yeah, exactly. You can see now the sellers is not letting the market going above the 40, you know, the figure 9,000.40. So okay, let's see if the market now with the first target will be 10, around 10, 9, 10. But you see, whenever it's going up, it sells on the 4, 5, 7 prices, which is quite a lot on the Nasdaq. So let's see. He will try to put more lots if whenever we see more buyers.
I have a question. You
Yes.
search your entry position based on the behavior of the market. Is this also true for the stop loss and the target, or
Exactly,
in the same, or
exactly.
just values?
No, exactly for the stop loss as well.
Okay.
Because when we put our stop loss, we will not. Yeah, exactly. So now, for example, we are making money, $400, but we don't want to take it because obviously it will be nonsense to lose a bit, lose a bit, lose a bit, lose a bit. And when you make money, we only make a bit. No. The strategy is lose a bit. And when the market is going for a trend, we'll take the full trend. That's what we want to do.
Okay.
And the stop, you have to very accurately search your exit point, because if you, for example, you're buying, you want to put your stop order, for example, below the support, not above, because above you have huge chance that the market will reach your stop. So you have to try to see which point have less chance to be hit. So you see, we could make like a lot of small trades, make money, but what we want to take is a full swing, because we think the market is very volatile, and when the correction will occur, it might be a huge correction. So now we have a big support at 82, around 82. This morning it did bounce a lot. So if it breaks, it might go down a bit.
Incroyable. On a gagné ce matin, on le repère.
Yeah. So now the market, the money we make this morning, we're getting
news.
Right. It's the same news as this morning, but obviously the US is just selling the news. So at some point there will be a reversal, I'm sure of it. But get the point where the reversal will occur will be quite tricky. So now we'll still be careful. We have money, so that's why we take more risk today, because we have money and it's a very volatile day. So on those days, you're willing to lose. You don't care, because you know that when you make money, you will make a lot as well. So you have to adjust your trading strategy to the volatility, which is the case today. It's very volatile. You can see the DAX is a plus 1.24. For example, for the day, it did move quite a lot this morning, plus 166 points, which is quite all right for the DAX. The reversal point might be there. Unfortunately, it bounced too quickly. So we'll be patient and see if we can pinpoint the perfect reversal point to buy the market. We might have missed it, unfortunately, and the market might go up to 9,400. Yeah.
78, il y avait un acheteur ce matin.
Yeah, this morning we had like a big buyer at 78. We can see it on the chart. So let's see if it's still the case now. Now the market seems to be breathing a bit.
Là, on voit qu'il a un peu plus de mal à vendre.
Yeah, c'est that's the support we had this morning. So we said 78. Let's see if it's still resisting or not. You see, there's 140 lots at 79.50, which is quite a lot.
C'est fou ça. Ce matin, on voulait mettre des ventes, il n'y a rien qui passait. Ce matin, tu voulais mettre une vente, il n'y a aucun.
This morning it was quite tough to sell the market. Today, this afternoon, it's the complete opposite. Okay, let's see if it's going up to 80. First, it might test the 83, and if it breaks the 83, it might go to 80, to 90, sorry. So 83. I didn't take the full size, unfortunately. So 83, first target, it went there. So now, let's see if the seller is still there. You can see there's the big volume at this area are at 82.25. So let's see if it's still, you see the seller at 78.25. He's just taking off his position. It was a spoofing. That means he's putting a lot big orders to scare people into selling. Ooh, he's quite still there. But the buyers didn't let themselves be, be sold. So now again, 83. If 83, we haven't been executed at 78. If 83 break, it might go to 90. Let's check if 90 will. Oh, we haven't been executed. We'll try to just remove few positions we have in order to be less risky on the market. So 83 again. Oof. Okay, we're out like most of our positions. Oh non, t'es short là. Okay. Oh no. That's what you call a misclick. Okay. So basically, he did like a cut and reverse. So this trade might go to 9,400. Let's see.
Donc, toutes les petites pertes.
All the small loss we made, we try to take it back at once. And basically, that's what we want to do. It's a big movement. But here, the sellers are so strong that we have no choice but to take off all our position now. Let's see if we can get another trade. Yeah, a lot of small losses and then one big win. That's one kind of strategy. Yes, there's a lot of strategies that like in and out, very quick trade. There we will try to get like 80% of successful trades. And the other strategy is selling, is losing a bit. But when you got in the proper trend, then you keep it and take the full swing. So here it went to the second level we had, 90. And then, as I told you, it might go to 9,400. So let's see if 90 is clearly breaking. It might go to 400. That's the move we wanted to take. Unfortunately, we moved our position a bit before. So now let's see if we get another position. So we have to make our strategies again. If the market is going, as I told you, there will be a reversal. So the reversal is now. If the 400 is resisting, it might go down again. Otherwise, it might go to the previous level, which is 22. That's what we call a V shape. That means it's a very big movement that it's fully corrected straight afterwards. So you see, when you trade during the day, now look, the target is reached 400. If it breaks 400, it might go to 22. But 400, it won't be broken straight away. It's quite a good level. So now, first time it's been rejected. Let's see if the buyer are still very strong. It's testing again, rejected. But you see, the seller, the buyer are stronger and stronger, which is a bit tricky. Okay, now the next level, first medium level is 10. If it doesn't go to 10, it might go down again to 400. Attention. Okay, it's back to 400, which is a big level. Now it was a yeah, it's a very volatile market, so you don't trade this market as you will be trading, for example, yesterday. So now you will try to get more, like your stop are a bit more extended and your targets as well. So that's the thing. You have to adjust, as I told you, to the volatility of the market. So now again, let's see if the seller is still here. And we put a stop above 10. We have a level at 10. If it breaks this level, we'll be out. Boom. Okay. So now the seller that were here just a bit before, now it's a few minutes ago it was only sellers. Now there's only buyers, and they're doing the same movement but with only buyers. So let's see if the market will go down again at the 400, or if it will break the level at 10 and reach 22. So we'll try to determine the mid level like 10 and create some corrections. So now it's selling a bit, selling. Okay, it looks all right. We put our stop at 8.25. That means that whatever happens, we'll be making money. And okay, so we exited the position a bit before. The target was 400, but it seems like it was a bit tricky to wait till 400. It's a very volatile market. You can see people are panicking. If you check the chart, that's what we call a V shape. You see the market was one second. One second, we're copying the market. Okay, that's the chart. You see the market went down a lot. It went up. That's what we call a V shape. And now it did resist at the mid level at 10. It didn't reach 22. You see, the sellers didn't let 10 break. So now it went back to 400. The level at 400, if it breaks, you see that was this morning, and then it was the afternoon. You can see how different it was. The market's getting crazy. So now let's see if it will. One way, it's a bit more tricky because you have to be very accurate to get the perfect point. As I told you before with the crude oil, the perfect reversal point. So now the sellers are back. So that's what Tarek did. Basically, when he was selling around the 8-10, the trend is clearly down. It's a downtrend, clearly. So he tried to take the perfect reversal position, but then when the market corrected, you have to wait for a perfect position as well, but to get to take the trend, that means the downtrend. So you always have to wait for a full correction before initiating a short position. That's what we did. Now the market is hesitating between 95 and 400. Let's see if it will go down to the previous level at 70. The seller is still very active. You can see whenever you see 280 lot at some I don't know what 88 98 96.25. That's a lot on the Nasdaq, and so the market, as I told you, is very volatile. It's hesitating. You can't guess where it's going because whenever I go up, some big seller is selling. You can see from 85 to 80 to 95 to 90. Exactly. So whenever it goes up one way, and whenever it goes down one way. So what we like is when the buyer and the seller are fighting each other. That's where we make more money because there's like a lot of trading opportunities. Here it's mainly buying, selling. It's not like buying, selling. That's what we like. But then again, you have to adapt to the market. So let's see what's happening, and if there's nothing, you see now the sellers who sold for like a 10 points, which means 40 ticks. Now there's a buyer like a bought for 10 points, 40 ticks straight away. It might go to 10 again, but this time it looks like it will break the 10 level. If it breaks 10, it will go to 22 maybe. Let's see how the market behaves. As I told you, we don't want to be in position in between, like in the middle of the range, unless we see something on the order book or if there's big news, which is for the moment not the case. So as I told you, the level like 9,400, the round number like 400 are very powerful levels, and you can see today that the market did react perfectly to it. So now it's around this level, like it's 90, 95, 400, something like that. Oof, seller is very aggressive. Just sold like almost 20 points, which is like 100, like 80 80 ticks. Yeah, 80 ticks. There's something else on the economic calendar. There's a big figure in the 5 minutes, the PMI in the US. The thing is, we don't enter a position before a big figure like this one. And the PMI is on investing, it's three bulls. As you can see there, you can see the PMI is here. So it's too risky to enter a position before a big figure like this one, because people will adjust their position regarding to this figure. If it's in line with what's predicted, then the market won't move that much. But if the actual price, the actual figure is very far from what was expected, investors will adjust their position to match the result of this figure. And if they adjust their position too aggressively, it's too tricky. So that's why you can't get in position before that, because you don't know how far or how close it will be from what's expected. So there's not that much chance that we'll take a position from now to 4 o'clock. Maybe if there's some question or something.
Yeah, I will take a look at it.
Thank you.
I have another question here from the platform. I think this is Atas. What is using here is Atas software. So
Exactly. So it's Atas order flow trading, but they did set up a proper order book, like a DOM. They sent us like a proper DOM for us to be
especially for you.
comfortable.
Okay.
No, but
okay.
you can ask for it. We can send it, or they might still have it. I think in Deutschland it's Michael, who's in charge of the German market for Atas. You can ask him; he's a very cool guy, and so he helped us to set up that for us to match the previous software we are using.
Okay.
Knowing that the software we're using, for example, like XTrader, cost way more than Atas. That's why we switched to Atas to match the requirement of our graduates.
And if you say adjust the strategy, it means increase cautiousness in entry and exits, or
exactly. For example, let's say normally you enter a position and you put your stop 5 points from your order. Now, because the volatility, for example, the market moves like 4-5 times more than it usually does, then you have to adjust your stops, because if you still put your stops at the same year and your profit target as well, because if you put your stop 5 points from what you used to do, now you will be hit all the time. And at the same time, you have to adjust your target, because if your target normally is 5 points and the market is 5 times more volatile, then you will have to get more. You will have to adjust it to get more money when you make a good trade. So it's one of the particular points which is a bit difficult to get. You have to adapt to the market volatility, and to get that you have to prepare for the trading day, knowing is there big news, what's the market theme at the moment, what's happening in microeconomy, all this stuff, what happened during the night, did the S&P future moved a lot, did the Asian market move a lot. You have to assess all of that, and then check the opening and see, that's going to be a very volatile market, or it's going to be a normal or quiet day.
Yeah, the last days were very volatile, and especially the indices moving back and forth. Yeah? So
no, it's completely crazy. No, I'm happy we won't have to take a position before 4 o'clock.
yeah, absolutely.
That's the market. You have to adapt. We're still making money today, but the US opening was a bit more tricky than the European session.
one, huh?
But then sometimes it's the opposite. Sometimes the US opening is very easy to read, and the European opening is completely boring. So it depends.
Okay.
Yeah, now the seller, you can see the seller is very, very aggressive. He's just selling like 10 points and putting 200 lots order, like trading orders. It's completely crazy. Look, it just doesn't stop. Now 85 is the level, it's the pullback from the level we had a bit before. Let's see if it's going to break. But anyway, I think before the figure, that's not where
everybody is positioning for the figures right now, I guess.
Yeah, and that's tricky, because the more we get close to the figure, the less people we put orders, so the market will get even more volatile, because if this seller want to sell before the figure, no one will be on the market anymore. They will wait for the figure to be published. That's the problem. So you will see less and less lots. You can see now there's like there's a spread in the market. So
it's very dry around. Yeah.
Exactly, completely. You can see the closer we get, the less order the market maker are removing all their position. That's why it's very tricky to
The big
get.
question is which side will blow off.
Yeah. It's not just one lot with a spread, two point spread, and like you say, it's a lot of holes in the order book.
So I guess coming in.
No, it's crazy. It's the figure. It's crazy. So the figure went in line. It's completely in line. No, it's a bit better. It's a bit better. Just it's obviously almost in line. We're waiting for 55. It went. It was published at 55.5. Not like something crazy. Yeah. So the market went straight to 400, and the seller is just waiting for this 400 to sell more and more and more lots. Is there any questions?
The sixth column of the dome, which is the volume sum. At what time did you start to sum up?
What do you mean the volume sum? Where? On the blue.
The sixth one.
So basically, it's only it's during the day. So
during the day.
Okay. Depending on the market, but it can be midnight. Before the European session was the future were opening at 8 o'clock. Now it's not the case. We have extended hours. Look now, Tarek did sell. He tried to sell more, but it hasn't been executed because he saw the seller is always there at 400, so he sold 400 something. He sold for here and just exited his position at 94. The seller obviously is just whenever the market is going up, is selling very aggressively. So instead of fighting him, let's get with him. So that's what we did. Before we thought, okay, coronavirus vaccines, people will buy. Obviously not the case. Okay, if he's stronger than the news, then let's get with him. So that's why Tarek did, and he did one big trade again. So yeah, on the left column, volume. You mean the column volume? Yeah. Yeah. So that's all the lots that have been passed on the market today. That means go back to zero when the market closes and
when the market is closing.
The future market, not the cash market. When the future market closes and open during the new session.
Okay. And what kind of settings do you have in the dome? Are there special settings or?
Special settings? No, we don't use that much settings. We only use, as you see, the volumes. We want the Q positions on the right, but it depends on the left. Sorry, but it depends on the markets. Because, for example, on the Nasdaq, the Q position is a bit useless. On a very strong market like the stocks, you have to get the Q positions. We use the buys and the sells on the right side as well. That means all the market orders, the buying market orders and the selling market orders. It can give you a lot of insight when the seller and buyer are fighting in a particular area. That means you won't watch them all the time, but when you have you manage to get a proper level, a resistance, a support, whatever you have, then you will check, is there buying orders? Are the limit orders matching these buying orders? And all that can give you information about the way the market will react. Are the buyers stronger, are the sellers stronger? That's all we do. And we have a cancel all, flatten and reverse button in a panic case.
Now you try to sell again, huh? At 2.
Yeah, exactly.
2.5, huh?
He did a very short stop. Because then again, 400 is obviously that he doesn't believe in, so he just cut it. Unfortunately, it did work a bit.
Je pense qu'ils vont casser le 400. Parce que le S&P, il monte en fait.
The S&P is bullish and the Nasdaq is resisting more to the uptrend. So
cette résistance, à mon avis, vont la casser.
If 400 breaks, it might go straight to 10 and then to 22. That's the level we did define a bit before. They are still the same. You see the market is getting more compressed. I mean, the range is getting smaller and smaller, so it might break one way or the other. At some point, it's too risky to define why it's going to break. You see, now it's a winning trade, but it was against our strategy. That means we saw a lot of buyers. We exited. We're not going to say, oh, next time I'm going to keep this trade. No, no, no. Whenever we see buyers, we exit the short position. That's it. So we don't have any regret. We just be waiting. So now you see, just keep on hitting those two levels.
But here I see you start trading at about 2:30. Yeah? Is this the usual time to start trading the Nasdaq future? Or?
Non, pas à l'opening. Non, il y a une heure de.
There's like one. Normally we have to change the time frame, the time of the chart. We don't use.
That was 1 hour before. Okay, yeah, exactly. That's the opening. Yeah. Okay, I'm sorry.
Have to adjust that.
Okay. So you usually use the European opening, I guess, huh?
Yeah, we trade the European opening. It's where you have the most liquidity during the day, and then we don't trade from 12 to 2, and sometime from 2 to 3. There's some trades, and if not, then we'll trade the American session. But we stop at the European closing.
Okay. So 5:30 is you are finished. You are flat for the whole.
Exactly. It broke the 400. The crude oil broke as well. Tu fais un clone et tu formes le tour tu clones. Super, et ferme l'autre. Ouais, super. Okay, now you have the proper time. Okay, you see, it's kind of wants to break the 400. Let's see if we manage to get to get the train. No, we didn't. We didn't get in the train, unfortunately. The uptrend might be starting now and get to 10, and let's see how it behaves as 10. And if the seller, you see, that's exactly what we were waiting for. But we're setting up our chart, which is not the good thing to do. Let's see what's happening. That's why we did cut the short position at 400 very quickly, because we are afraid of this kind of moment that the market will break the level and go up. Now we can see that the sellers are still there and they're still selling. It's still strong. But the buyers now is buying above 400. It's still is protecting the level at 400. So we might have a new range between 400 and 10. Let's see. Or if the sellers is very, very powerful, might go down to 95 again, as it does for a lot of minutes now.
Là, ce qui serait bien, c'est que ça aille à 10 pour le short.
Ouais. See, the seller is very strong. For us, the best case scenario is that the market will go up to 10. You see, the sellers is just too strong. It went straight to 95. So let's see if 95 is breaking, it will go to 80 something, 80, 87, something like that, maybe 88. Let's see if it breaks for the moment. The buyer are still protecting 95. You see, it's okay. Now it seems like it's breaking. Okay, 90.
C'est le même vendeur qu'à l'ouverture.
It's the same. So now I'll see if there's some. The buyers are resisting. No, they're not. The seller is very strong. Since the US opening on the Nasdaq it just keeps on selling. See, okay, 88 as we said. Is it going to resist or is it going to go to what's the next level? 82.
C'est le même vendeur qu'à l'open.
It's exactly the same seller as it was in the US opening. Okay, next level is 82. We're not gonna do the same mistake twice. We're not gonna buy now. It might go to the lowest of the day. So let's see if the next stop might be 82. If it doesn't break the 82, 88. If it does break the 88, it will go to 82.
C'est qu'après le prochain niveau c'est le ancien bas 73 et puis après c'est 40.
there's a big gap between the lowest of the day, 70, and then if it breaks 70, it might go straight to 40.
Okay. One participant is asking, can we see the trades and the results, and what is the performance over a year?
What do you mean? 2-day performance?
Yeah, so the year-to-year performance.
Year.
When you use this kind of strategy.
Tu peux doubler ton capital.
You can double your capital, and at the same time you can lose a lot. It depends on people. It depends on how you trade. For example, Tarek and me, we do trade mostly the same strategies, but we'll have completely different results because I like to trade against the trend trades. So it depends on the people, on the trader personality as well. So, for example, there's some trade I will have never take. There's some trade I will have take. Same if I was trading some trades Tarek will never take. So you can't generalize everything and say, okay, whenever I use this strategy, that's the performance. And it depends as well on the market. Because if the market is
just the same, this is the same seller than at the opening. He sell every price.
Okay, it's at the lowest of the day again. Let's be very cautious here, because if he breaks the lowest, all the stops will be hit, and the market might go down quite a lot. And the next level we have is at 40. So I don't think we're gonna take any long position before 40, as it might do the same thing it did at the opening. That means like selling like crazy. So now the buyer did protect the lowest of the day. It went straight from 70 something to 85. And let's see if, okay, it's the 88, mostly the 88 level we had before. Let's see if this resists and we'll go down again to the 70. It's worth the risk, because if the market go up, we might close very quickly. If it goes down, it might break the lowest of the day. But here, unfortunately, the seller are protecting the 88. It's the same level all the time, protecting 88. Let's see if they will keep on protecting it, or if the buyers are very strong and they will move the market back to the 400. You see, that's market where you can't take only few points because it's too risky. He could take like all those points there, but it's not worth the risk. The risk you take, you need to take more than that. So it's better to flatter position than to take like those few points the market gives you. Because if it goes down, it might go down to 70 something. And if it breaks 70 something, it might go straight to the floor. Perfect. 70 something. That's exactly what we were predicting. Now that's the tricky part. Will the buyer still be here now, or will the seller sell everything? Because if the buyer is not here, the seller will sell everything. He has to sell his position. So he won't be waiting for the buyer to buy again. So here we are again. Okay.
There we are.
Yeah. So we didn't take the risk for the market to break this level. So we sold the 88 level and we got back the lowest of the day. So the risk it wasn't worth the risk to play the breakout. It did test it 3 times, and now we had the choice: should we play the breakout, or should we take our money now? So we took the money, and because the market is very risky and volatile, we didn't want to take it. Now if it breaks, it's fine. That's why we take our decision. Trading it's mostly about decisions. Now the decision was, okay, let's not take the risk. Yeah. So basically that's it. We take small loss, but when we make money, we make a big money.
That was very interesting, because you told us there's a big seller in the market, then you positioning at about 400 and it moves down, and then you make the money. That was a good example, huh?
Yeah. The opening was a bit difficult.
Yeah.
Now you see it's more readable than the opening. The opening was a bit difficult. Now you can check the proper levels. You can see the market, the buyers and the seller fighting. And during the opening, it was too difficult. You see only one buyer. Now you can see one buyer, one seller. Sorry. Now you see buyers, sellers, and that's what we like. Okay, they're fighting at this point. Let's enter. And the point were always the same. 400. It was 10, 400, 85 kind of, then to 88 and then 70. It's still the same, You see now 70 is resisting. We exited a bit before, and if it breaks 70, the next level is 40. Might not go to 40, but we don't have anything before 40.
The last barrier was 40 this morning.
40. Okay.
Yes. Yeah. This market is very volatile.
Okay, look, it went to 80 again, almost 80, and then bam. It's very, very volatile. So now it's doing like a 40 ticks, like it's nothing.
It's not like the S&P. You cannot expect to take 5 ticks or 10 ticks because you must try to make more.
And you see that on the price levels, you have much more numbers of contracts than on the Nasdaq. So there's more liquidity in it. Okay, so this is you can use, by the way, you can use ATAS with WH Self-Invest.
Of course,
and if you have, if you are a new client or you want to open a futures account, I can give you a special offer. So you can click yes if you want to have a special offer for new clients to use this kind of setup with WH Self-Invest, and then I will get in contact with you and we can talk about it. All right, thank you. So I have another question here. Do you set your stop loss? I saw you entered, but you did not set the stop loss immediately.
Yeah, this one we wanted to exit manually, because before it was really straightforward. Now we could see that worst case scenario it was 85. So that's the risk where the maximum risk we are going to take was 85. That's why. And when we entered the market, we are making money. So we were very focused. When you enter a position, we are 100% focused. So you can see 70 is still resisting. See, it kind of broke it. It was what we call a fake break. That means it broke it and it went straight back above 70. That's a very tricky position here. But you see the lowest are getting, the higher are getting lower, sorry, and the lower are getting lower. So the trend is basically down.
Yeah, do you have a big order in there or big size at?
Yeah, completely here. It's very crazy.
At 664, huh? There's 31.
I can see the seller is very strong. He's very since the opening. He is very strong. Boom. But the lowest he gets, the more difficult it is for him to sell easily, because the buyer are getting interested by those prices.
Yeah.
They see that as an opportunity to buy. Selling again.
And you have this huge rise in the European market, so I think there are a lot of buyers waiting now. Huh?
Yeah, exactly. I think a lot of people who bought during the European session are now very very sad. They are regretting to be buying at this time. But the DAX is not falling that much, obviously. Actually, the DAX is resisting a lot.
So is it possible to see the results from the trades we made in this session?
Yeah, that's here.
Okay. There we are. Okay. So this is the cumulated. These are the cumulated numbers for each contract. Okay.
Yeah, exactly. Nasdaq, crude oil, S&P.
Okay. Cool. Thank you.
You have all the orders. You have everything, but it's right. The most important is to check the chart.
Je te dis, il y avait l'open qui était compliqué.
The opening was a bit difficult, but then you see the opening here was difficult. You know, we made a lot of small losses, but then from this time, you see the first green candle was there. So from here to here, no green candles. Then that means the buyer are back. And see, now we have more buy position here because we saw the buyers. And then the thing is, when the buyer were back, they went just crazy as well. And from this point to this point, it was more readable, see? So we did like a good position here, we did a good position here, a good position here, and obviously a good position here.
And this was the good one, yeah?
Yeah, the last one. Okay. So now at the moment, you see the market just ranging around 70. It's indicating the next level is here, but nothing is happening. So if the market just stay there, we won't do anything. So
Makes sense.
So that's the level we had. See, 10 is here. And we have the 400, it's here, 400, you can see. Then we have 88 is here. See, it's the pullback. So 88, it was when the seller didn't let the market go up. Then it broke, then it bounced, it went back there, and then it broke. And then now we are at the next level, which is 70. And you can see the candles are getting very small. So the huge liquidity we have before, the huge volatility, now it's just getting back to normal-ish. So next level for us, same. We'll see what will happen at 88.
So yes, you will be in Frankfurt, I guess, huh? In the next weeks. You will be in Frankfurt in our office, huh?
Yeah, exactly. Normally, yeah. Now you see, now it's market is back to less than normal. Nothing is happening.
Ils ont essayé de casser le peu plus bas.
C'est quoi les dates? Yeah, we will be in Frankfurt, as you said. When was it again? Forgot the date. We have a website, so explain what we do.
That is cool. Okay, that is cool.
Orderbook, trading.They. So it shows the two lives we did with WH Self-Invest. One was in World of Trading with Tarek and me in Frankfurt.
Yeah.
And one was online. Basically, that's what we show during our seminars. That's the way we trade.
Yeah.
And we will do it's right again. We'll do live trading as well because that's what we like to do. And yeah, it will be. Let me get the date. I don't know when exactly.
I think
it is.
It's on February 26th to 28th. Huh?
Okay,
so
super. Yeah,
you will be in the office, and it is a 3-day seminar. Huh?
Yeah, exactly. It's back to, you see, compared to what the market did before, I just a bit boring. Just boom, went up, didn't go up to where we expected, 88, and now it's back to 70. Here, 70 is indecision, too much indecision. People don't know where it will go. It might go up, it might go down. So sellers are selling a bit, buyers are buying a bit. It's not something crazy. So
it's getting
it's getting a bit interesting.
Yeah, back to normal.
Not as volatile as it was before, but okay, 80.
Yeah.
For us, what we do is this area. This area is a good area. Knowing that it's 3:30, the more we get close to the closing, the less we will trade. Obviously, we will protect our P&L at some point and trade only very good setups. This is not that it was as it was before. That's the thing. When you adjust to the volatility, when the volatility is huge, then when it's back to normal, you might not take that much trade for a bit because you keep on being very cautious about the market. And if the market is not the same, then
c'est le reflet de technique. D'accord. C'est le reflet de technique.
Oh, je comprends, c'est
la tour technique sur la tour. C'est la tour. Si tu regardes le matin, il y a que deux.
Non, bah alors c'est plus raisonnable, tant pis. Sinon,
yeah, now it's getting a bit boring. Is there any questions regarding?
No, I think I have all questions
Answered.
done.
Okay. Since only two-way wise, there's no questions. Maybe people understood everything or they understood nothing. I hope it's the first choice.
Yeah, sometimes to be honest, for me, it was sometimes very fast, so you have to be very concentrated and focused.
Of course. That's
but
the problem
that's
with
life. Yeah,
trading.
that's trading life.
Yeah, we don't take our time to just explain everything and obviously today even more because the market is crazy. So you have to be even more. Oh, look, 70 again. The thing, if it breaks, it might break to very low levels. It looks like my break now.
Okay. Do you think we have some trades or are we finished now?
I think we finished now.
Okay.
Yeah, I think so.
Great.
Now, if it breaks, there's nothing to do now. It might go there. So maybe 40, but the chance you have that the market goes to 50 is close to nothing.
Okay, very good. Thank you very much. I think
Thanks,
this
you.
was
Thank you, man.
very, very good. So
Thank you.
we could learn a lot about the scalping out of the order book, which is not the easiest thing to do in terms of trading, as we saw. So thank you very much to all the people out there.
For us, it's a more
And
comfortable trading style, yeah, because you don't get position during the night, so at least you sleep tight. Yeah, you can trade only 2 hours per day during the opening session. So for us, it's what suits us best. Yeah.
this is the best way for you, as you said. You have some opening hours and in the morning for the European side and on the US, and sometimes in the middle of the day. Yeah? That's what I have learned today.
Yeah, and it's easiest. It's easier the morning. The European session is way more easier than the American one. It's less volatile. It's more easier. It's easier to read. Yeah.
Okay. Data feed is CQG. What you are using here?
We are rhythmic. We are using rhythmic.
Okay. So with WH we are using CQG and together with Atas, which is fine too.
CQG also is working on Atas.
Yeah.
We can work with any kind of subscriber.
And you have also the level 2 data and the domes and the volume and everything is there and just tick by tick. So it's a very, very good data feed.
Exactly.
Okay.
People can find exactly the same thing in WH.
Okay, great. That's good to hear. I have found the seminar. Here it is. So it's I have it in German right here. I think it's okay for all the German people here. So it's in Frankfurt from February 26th to 28th. Yeah, you see all the different topics that you will learn in these 3 days, and the price is 2,000 euros, but any client from WHS gets 500 euros of this price, so it's 1,500. That's the special offer. Okay, so thank you very much for this very good live trading. See you next time.
See you next time.
Yeah, I'm sure we will meet on a fair or something like that.
Hope so. Yeah.
Okay, take
Thanks for
care.
your time.
Have a nice day, and thank you very much to the audience. And yeah, have a nice evening. Thank you. Bye bye.
Thank you.
Bye.
Bye bye.